Hello and welcome to the Capital Allocation channel. So today I want to give you guys 5 dividend stocks from the Asian markets that I think are a decent value here. Obviously, this is not financial advice. It's just some information for you guys to look further and do your own research. So let's get right into this analysis. Here we're looking at Toyota stock, the weekly chart. Toyota has been in an uptrend for a long time. This has been a really great stock for a very, very long time. Here we have had a decent pullback. We were up here around just under 215 and now we're down around 170. Could there be further to fall? Sure. But I'm just trying to look at the intrinsic value of this stock and see if this would fit in my personal portfolio, and you guys could do the same and see if this fits in your portfolio. So Toyota currently has a dividend of 3.82. Historically, the last few years when I've been watching this stock, it's been around 3, many times a little bit under, around 2.8. So this is pretty decent here compared to historical due to this little pullback we've had recently. So to go ahead and look at the financials, Toyota has a PE of 8.52, price to book of 1.03, so fairly valued. I do like to see that. Current ratio of 1.06. Around a 10% return on equity, so not too bad. A little bit higher debt, but again, Toyota's been managing this for a long, long time. And with a 3.8% dividend, this seems like a decent opportunity to pick up these shares. The next one I want to look at is POSCO. So this is a South Korean steelmaking company. The peak back here in 07 was around $200 a share. Now we're sitting here at $60 a share, so you can get it at a third of the all-time high price. In the last few years, we've been trending in this range. So we've hit kind of a top here 3 times. We've got this nice little double bottom. So will we go down and test this previous low? That is difficult to say. We are in a downtrend, so there may be further downside until we can confirm a reversal here. But let's look at the intrinsic value of this company. So here we have a dividend of just under 6%. If we go ahead and look at the financials, we have a PE of 3.83, so very low. Price to book of 0.4, so you're basically buying $1 for 41 cents here. Current ratio of 2.2, so that looks great. Return on equity 14%, and total debt to equity for a capital intensive company of 45%. This is a really well managed company, and I think that 6% dividend, PE in the 3s, this looks like a pretty cheap stock to me at the moment. All right, another one here, Mitsui. Again, all Asian companies today. Some of the top 5, I've looked in the ETFs and kind of chosen a few dividend stocks that had good PEs, good debt ratios, and kind of weeded out some of the more overvalued stocks. So Mitsui, we're up here at a previous resistance level, so this may be a dangerous area to buy here. Just from a technical perspective only. Now, if we break above this, definitely potentially we could see all-time highs, and the trend looks pretty good here. So I think this is in a technically a difficult place where it's hard to say if you're going to hit that previous resistance or break through it. But let's go ahead and look at some of the fundamentals of this company. All right, so again, here 3% dividend, Not the highest dividend, but reasonable. Looking at the financials here, PE of 6.26, price to book again under 1, 0.84, current ratio 1.5, a little bit lower return on equity, and again a little bit higher debt, similar to what we saw with Toyota. So with the low price to book and low PE, this looks pretty good. But again, some of these other stocks do have a higher dividend, but overall not too bad. All right, Hitachi. Hitachi is in a downtrend. We do, in the short term, though, have this bullish engulfing candle. So will we get a reversal? We're still in a downtrend, so this no reversal will be confirmed as of the moment. So this could see further downside. You have this twist on this Ichimoku cloud. Again, a little bit bearish there. Wow, incredible. All-time highs. Yeah, back in this Asian bubble. Back in 99, 2000. Well, I guess the... yeah, so around the tech bubble. Insane. Anyway, so again, trending upwards. We've got a pullback here. But let's go ahead and look in these fundamentals here. So here, just a 2% dividend. You can get comparable yields with many American stocks. As far as the financials, pretty low PE, price to book above 1. So again, more similar to what we can see here in the US. Current ratio 1.29, return on equity 15%, and good, a well-managed company, reasonable debt. So I think, again, this is a decent stock, 2% return though. I like to see higher yields for these foreign markets. I know definitely they're out there. So that's what I like to find, but this is a good company if you use any of their products. Then you know they make quality products, so something to think about there. Now for the only bank here, Sumitomo Mitsui Financial Group. This thing hit a peak up here about 27. We're here under $7, so significantly lower than previous highs. What I like here is that for over 10 years, this thing has been fluctuating in a pretty tight range. So should that continue, then it's nice to have that stability where you can pick up shares on these downswings and then either lighten up or even trim your position at opportune times. So now this one here, you got over a 10% dividend here. So if it doesn't go up, if it just again fluctuates around in that range, you're still picking up that 10% dividend. So to look at the financials, it's a little different with these banks, harder to analyze. These numbers don't necessarily mean the same thing. PE 7.42, price to book 0.46. The current ratio does not look that good. Lower return, and obviously the product of banks is debt, so this is going to be a lot different than some of these other companies. But huge dividend here. So anyway, guys, just doing a little bit of research, trying to weed out and do some due diligence, trying to find stocks to put on my personal watch list. And so I thought I would bring that to you. Maybe someone wants to put these on their personal watch list. So let me know what you think, guys. Let me know if there's other better values or anything you would like to add. Thanks a lot. Take care, everyone, and I'll see you in the next one.